Welcome back to the channel, folks. Today we're diving into one of the most fascinating and often misunderstood topics in the world of finance: the stock market, market bubbles, and the mindset of master investors who have weathered the highs and lows of the market. Whether you're a seasoned investor or just starting out, understanding these concepts is essential to building wealth and avoiding the common pitfalls that many make when it comes to stock trading. So what exactly is a market bubble? How does it form? And how can you spot one before it bursts? And more importantly, how can master investors take advantage of these volatile market cycles? The stock market. At its core, the stock market is a place where companies and investors meet. Companies raise capital by selling shares, and investors look to buy those shares in hopes of a profit. The market itself is driven by a mix of economic factors, company performance, global events, and investor sentiment. But there's more to it than just buying and selling. The stock market is inherently cyclical, meaning there will always be periods of growth, stagnation, and downturns. The shares are traded on something called a stock exchange. There are 60 major stock exchanges around the world. The most important ones in the USA are the New York Stock Exchange, NYSE, the NASDAQ, and the NYSE American. The London Stock Exchange, the LSE in the UK, is one of the oldest in the world. Before the LSE was set up, people who wanted to buy and sell shares did their business in coffee shops around London. The goal of any shareholder is to buy the stock, hold it for some time, and then sell it for more than they paid for it. But prices constantly go up and down, and so it's risky business. What is a market bubble? A market bubble occurs when the prices of assets, be it stocks, property, or even cryptocurrency, become inflated beyond their intrinsic value, often due to speculative trading. This overinflation is usually driven by irrational exuberance, where everyone is buying into the hype, pushing prices even higher. But as we've seen throughout history, when reality sets in, these bubbles burst, leading to sharp market corrections or crashes. This is exactly what happened with tulips in Amsterdam in the 1600s. At one point, you could buy a house in Amsterdam for the price of one rare type of tulip bulb. But it was a bubble. Eventually, the bubble burst and tulip prices collapsed. A similar thing happened in 2000 with the dot-com bubble. In the late 1900s, people were rushing to buy internet company stocks. Nearly everyone was buying them. The bubble burst and the stock market crashed. Role of master investors. Now, when bubbles form and burst, it's the master investors who often come out on top. These are the investors who think long-term, and they don't fall for the hype. People like Warren Buffett, Charlie Munger, and Ray Dalio have built their fortunes by sticking to a disciplined strategy of value investing, understanding market cycles, and not getting caught up in the frenzy when markets are overheating. Warren Buffett, with a quote, "Be fearful when others are greedy, and greedy when others are fearful." How to learn from the masters. Master investors focus on the fundamentals. Instead of buying based on speculation, they look for undervalued stocks, companies with strong fundamentals, solid management, and growth potential. So, while the masses chase after the next big thing, these investors are patient, often staying on the sidelines during periods of excessive speculation, waiting for the bubble to burst so they can pick up undervalued assets. At the end of the day, the stock market is an exciting place to build wealth, but it requires patience, discipline, and a clear understanding of market cycles. By learning from history, understanding the causes and effects of market bubbles, and adopting the mindset of master investors, you can avoid making rash decisions and position yourself for long-term success. So, next time you see a market soaring or hear about a hot new trend, remember to keep a cool head. Ask yourself, is this a sustainable investment, or is it just another bubble waiting to burst? If you can think like a master investor, you'll be well on your way to making smarter investment choices. Thanks for tuning in. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you never miss out on our latest content. Drop any questions you have in the comments, and I'll see you in the next one. Stay informed, invest smartly. Catch you next time.